Welcome to TradeTheMBI.com. This is John's Reporters for the 12th of April, and a secondary GAM. Right here, little lovely yellow candle forms. A little bit of a white tip, but you can see where the 1 and 2 are in the middle there. That's just the high and the close of it, the bar, and it represents the GAM. But you can see we've had this slight improvement of the shakeout where we've turned into the lighter color right at the 23%, not a surprise, but we've been hitting resistance at the 38, and we hit it again yesterday, and we're modest, like right in between there right now. We've had a decent increase pretty much from the end of the month, and then we had that little spike on the right around fund money time, coming in around the 4th to the 5th range, and that gave us the little real bounce up on discount, which was faded immediately here. So we're just creeping along. We've got no reset of our short-term buyers, so they're kind of spent, and this is just the broader overall upside pushing things. Of course, we had war concerns, still do. I think that's weighing on the market, keeping things under control. We had Fed, that kind of thing, the basics of the economy kind of stuff, keeping things in check. Plus, we've had a pretty decent run overall, even though we're kind of flat at this particular point. The run up to this point was pretty dramatic. You can see the slight difference here of the NQ. The NASDAQ is holding above its 38%. That's going to be a bit more dramatic because a break below for there provides much more downside range, comparatively speaking, to the S&P. So that'll be an interesting one as it plays out going forward. And the euro just maxing out here to the top side of the range. No shock there because the European Union is doing so fantastic. Bonds, again, in worry time, you go to quality, flight safety. No issues. They're still way over value for what it should be trading at, but that's a different issue. And oil, now making new peaks. So this is going to be problematic going forward because this is the first indications that inflation, of course, that's a pump right now because the idea that Syria, war, interruptions of oil supplies, blah, 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 blah. But it is what it is. It's in a buy configuration. It took off. There were some people reading the tea leaves before it even began. Shorts had faded this quite a ways back here. Is it overbought? Yeah. Does it need to retrace? Yep. Does it have to do it right away? Nope. Gold. Ooh, look at that. This would be what if you're candlestick charting, you're just like freaking out. Oh no, gold is going to plummet. This is like the death signal. A bit overbought, but it's been a good signal since the cyan moved under red right there on the DOC and right above the green ABM. It's been up since. So this was the lovely aspect of the day. We had this beautiful decline that took place from over here. Let's enlarge this now that we've seen the broader view. And stayed beautifully below the 23% line. Then we ended up with this signal, and what I like about these, particularly when we get the move of the steel above the 13.5, this is an important one to follow. When you have this reaction, you've effectively created a move from underneath. It remains active until you get the crossover of that steel below the cyan, right here. So at that particular point, that is when the uptrend from this signal ended. Now, there are times where you'll get this signal and price just doesn't do a whole lot of anything and then crosses over, and at that point it's over. In this particular case, you had excellent power momentum from your reds moving into a new zone and continuing up at the same time. You had this beginning weakness, but you still had rising shakeout, and at this particular point you then had the beginnings of gold coming through, and with the rising shakeout continuation, it just kept going and got about right to that 50% line, and then did its secondary wave. The ABM followed this beautifully. So this is the full reset, boom, follow along, and depending on your entry, there's two schools of thought on this one. Even if you waited on this because you had no close above the 23%, which I was short coming down from this one, so I had my turnaround point adjusted after the signal came into that 23% and was able to flip from the short side to the long, and a little bit later, it costs a few points, but at least at that point you have the confirmation of the close above the 23%, which was right here, and oftentimes these will only go a zone or two to the 50%, and then you have to keep your eye out. But at that point, we could see that we were still continuing with the upside move, and it went quite a way to an extended little run before a nice little DOC spread with good algo activity. See, this is the problem sometimes. People get excited about a short that doesn't quite have the orange spike, because this lets us know that we have extreme activity taking place. And this one was a little bit tougher because you still had magenta over 15, and I'm always a little leery of that setup. And then by the time you had the dip of the gold and everything going, it was right about here at the 47 point, and all you got down to was the 50%. It was still worth. So this is the thing with the ATR right now, it's still worth 5 to 7 points. So depending on your entry, that is significant. We ended up with this solid little turnaround bounce right here. Interesting thing, we ended up with the cyan moved underneath red, right in the middle of it, and what I was calling for were like back on this one, and this is where you see those, someone asked me about the horizontal lines before. These were the positive extremes from earlier, and so we came perfectly down to the previous one, and I gave my target on the Skype chat. I said, hey, I'm looking to get to this secondary one at 2645 plus, and that's exactly what it did. People who don't think that they have, direct correlation, it's not a Fibonacci number, it's nothing related to that. It's just when we recognized algo activity from our extreme histogram. And that is really where it's at, because they've picked a random number, whatever it is their reasoning was, we don't know, don't care. We just need to identify it. That's the most important aspect, and that's what we've done with our extreme histogram. And dip below the red line also usually indicates that after you get a move going the opposite way of it, eventually you'll retrace that level. So it's always worth noting on that one. Here again, the short comes through, you're still above. Now you can certainly wait. I have no objection to that either, because by the time you ended up with the rollover and the dip below, it was right about there. Not a whole lot of difference between 53 and 55. I was short a little bit early and took a little heat with it, and that was just a strange happenstance. Not paying attention, really, is what that was. But I knew that we were going to be rolling. We were getting towards the end of the phase right there. We had a lot of positive extremes building. That doesn't mean that can happen for a while, because it does. But then we ended up with this just muck. I mean, this just traded sideways for the longest time. But then we started to see the rising gold below the 50% line usually calls for the lows to be returned. And then when we were getting down in that range, this was getting towards the end of the day. I was expecting even any pops to start fading. And that was even like right over here. We ended up with the same thing, just rolled over. And again, this is that when you get rising gold and you're even below the 23%, that's even worse. I mean, look, we started it right here, another one right at the 23%, rising gold, just shot up to the 50, but faded right back into it. And I just don't know that you're going to catch a whole lot of buy fever unless there's a cancellation of strike or attack or whatever you want to call it that's pending. That would at least alleviate market stresses. And again, I think people are just buying their time towards earnings. So that's the long and short of it right now, and a little brief recap of some of the unique things that we can do with the indicator signals on there. This is where some of these that violate some of the little bit of rules, this question becomes of how do you manage it and whether or not you wait. And sometimes my preference is that unless you're, for me, I'll add into a contractor here and that if there was a typical move, but this is where you have to weigh your parameters, and you should have pretty set rules. You're either going to never trade that, or you have a set guideline if you're going to take on some of these, because the reality is while it's not a horrible signal in the setup when I mean, we're right at the line. In fact, what was the value for it? It was like 15.29, so it's right on the precipice of it. Usually they're higher, than that, and you get over it. And we did it twice in a row, and I think that I just had a general self-bias given the war footing, and I think that added to it, but which isn't always a great thing. The real question becomes, though, is following these on a consistent basis. If you're going to do one like that, you have to do all of them like that, and we can see in a bull market where things are really moving higher that would be problematic, because you're more likely to get just a little bit of a dip here, maybe to the 50%, and then you're going to run back up and make new highs. And that's typically what would happen with a gold setup like that. So, as always, trade well. I will keep putting these kinds of charts and details up on Skype chat.